Chart of the day today is Netflix. No surprise probably to all of you, given what happened with the earnings last night and the move that we're witnessing today and the follow through on shares. Look at that, up almost 11%. They beat subs, great, raising prices, record high. I would go to Weiss first on this, like I know he wants me to, because
let's just you and I talk about it.
You've owned it longer.
Joe's listed to me very often.
He's owned it a lot longer than you. As much of a victory lap as you were trying to take on the texting last night. I'm going to Joe first. Sorry.
So Steve made a great call saying that it was going to approach 1,000. Kudos to him. I hope he's happy wherever he is right now. But look, this was an absolutely phenomenal quarter. I mean, this was the largest quarterly subscriber growth at 18.9 million. This is more than they did during the pandemic, the first quarter of 2020. So 300 million global subscribers right now. We talked about the price hike. I think now it's up to $17.99. Of course, people are going to pay that. Live entertainment. The Tyson fight apparently was really what drove a lot of that subscriber growth. And I thought Josh yesterday made some really excellent points, and it kind of resolves some of the challenges that they have as it relates to churn. So I was concerned yesterday about positioning and the bullishness of, the extreme nature of that positioning. But when you have this type of earnings report and subsequent to that, the stock's up 10%, I think to a certain extent that alleviates some of that concern.
We'll give you credit, Weiss, for the great call you made.
Which
it looks
one,
like
Scott?
It looks like this one singularly.
Okay.
It looks like it's heading to $1,000. What do you do? What do you do with the stock? Because you bought more. You bought more last week.
I did. And the stock had sold off. It gotten near this level, a number of weeks ago, and sold off to like 830 or 835. It's a great opportunity to buy. Look, here's what people don't talk about, which is that the other video services can't compete with them. Yet a number of them are more expensive. Why can't they compete? Well, Netflix, what I love about it, you talk to people, what others love about it, is they drop an entire season on one day. And the reason why the others can't compete is because they don't have the dollars. They don't have the capital to keep putting out product. So they're putting out product is, let's put out episode 2 in a week, episode 3 in a week. So you're going to go to that more robust content. I would tell you that just as a guess, that Netflix puts out more content than all the other meaningful streaming services combined. So that's what's going to drive it. And as I mentioned last week, that they keep putting out more and more non-English language series. So they're growing their international to a very large extent. If you go to your feed, you'll see Spanish, you'll see more Swedish, you'll see just pick a language. It's all there. So to me, it's going on all cylinders, and they still have pricing flexibility to go. So
let's take the bear argument for 1 second. Let's say, in fact, the valuation is high, the price is reached to a certain extent a parabolic level. What do you do with your position? The stock should not go back below yesterday's close. Plain and simple. So 869, I think, was yesterday's close.
Yeah.
You put a price stop at 869 if you're long. You should not see that stock below there because it invalidates all of the positive effect of today's earnings, of yesterday's earnings.
What period does it invalidate it? Well, does it invalidate it just for the next few weeks, for the next few months? Because the fundamentals are still there, and that's different in our trading strategies. Your strategy, which I'm a big believer in, because I am invested in Joe T, is one way to play it. The way I prefer to play it is as long as there's positive momentum in the fundamentals, right? And that positive momentum doesn't have to be a beat. It could be meeting expectations. It could be a few metrics working and a couple others don't. I don't care. As long as that keeps going, I will suffer through the volatility and use the volatility not as risk, but use it as opportunity, as I have on this and Meta and others, because I think that's the way you play it.
Remember, I come from a futures background, so you're always thinking about how you're reshaping risk. You're always thinking about if you're in a position where potentially could I be wrong. And I was tutored and learned at a very young age that you have to utilize those price stops. If it goes below there, it should retreat even lower. It doesn't change your bias or perspective that it could be a fundamentally strong company, and you look to re-enter at that point.
I made more money, though, longer term.
Are you bragging right now?
Buying great fundamentals when there's been a momentary dislocation on the stock price.
You know you're invested in a momentum ETF.
I know.
Weiss made a lot of money. Joe's a self-described prodigy
exactly.
in futures trading. Shan, you got anything you want to drop on the viewers?
Scott. I mean, no, I'm not going to add into the self-promotional activity that's happening here.
As humble and as likable as ever.
You're going to have to find that word for me, humble. Sort of escapes my vernacular.